Good evening and welcome to a brand new show of Markets Tomorrow. I'm Nikunj Dalmia.
I'm Tanveer Gill. It's been a historic day for the markets in terms of the kind of fall that we witnessed in the session, and record lows really coming in for the currency as well. So best time to get a slice of opinion on how things stack up as we step into expiry. Gautam Chowchariya, who's head of India's small cap, mid cap research at UBS, will be joining us with his views on the market. Sandeep Wagle will be taking us to his technical sense given today's fall, and also P. Funny Shekhar, fund manager, PMS Angel Broking, will join us with his views as well. Let's get in Gautam Chowchariya's views first as we discuss today's market session. Gautam, what could influence the script for the Indian market in the month of September and henceforth, really, given the way we are coming off right now?
So I think the rupee script will still be the biggest one for the markets. And the way we look at it is that till 62, 63, the rupee move was more a symptom of the underlying stress in current account deficit, etc., and not necessarily creating damage on the real economy as such directly. But again, the recent move over last 2-3 weeks specifically, that has indicated rupee moving to levels where it itself can start causing damage to the economy and the markets, becoming a more vicious cycle. Higher rupee, higher inflation locally, and which also puts more depreciating pressure on the rupee longer term. So we are getting into a vicious cycle from the rupee front, and that's something which hopefully the government and the central bank can address by taking redeeming measures. So that will be the biggest driver for the markets.
Kanhaiya, I guess capitulation is the true word which captured today's market action. The problem here is that how does one figure out that after today's capitulation we could have a durable trading bottom in place?
Well, it's always difficult to say when you will have bottom when these kind of moves take place. Going into next month, I guess you will have a Fed policy that will be a major determinant, because this entire beginning of this nervousness was on the back of what will the Fed do and how much and how quickly it will taper the stimulus. We have now got into a extreme downward spiral for currency. Then you will have the first quarter GDP print. And of course, as inflation is not looking too benign anymore, I think the next 2 to 3 prints of inflation will also be pretty important. So I guess it is difficult at this point in time to say when does this capitulation end, because if you actually analyze the spaces where the maximum correction is taking place, I believe that investors who have entered maybe 2 or 3 years back still are sitting on a decent amount of profits there. Although the same cannot be said for dollar profits, at least in rupee profits they are sitting on a decent amount there. And to that extent, if the news from the US as far as stimulus is concerned is not very bright, then you can very well imagine that some of these investors might, global investors that is, might be tempted to go back. But at this point in time, if the news from US were to be neutral, I guess the dollar yields simply don't justify booking out of this market, because as you rightly pointed out, one is looking at about 19 to 20%, including the currency loss on their positions, and it doesn't make sense to get out at these levels.
Gautam, let's talk about Nifty levels now. Do you think Nifty can break below the previous low of 50 to 50 and it actually could go back to levels of 4800?
So we still sticking to that view that 50 to 50 is a kind of lower end of the range, unless we see another leg down the rupee from current levels of 65. So if we see a bigger leg down on the rupee, then it itself can cause Nifty to move down. The important point here is timing, and when you say timing is also the fact that because the rupee has depreciated, we are clearly seeing signs of economic slowdown. That should at some stage lead to slowdown in trade deficit numbers and current account deficit numbers. We've already seen initial signs of that, but we need to see more clarity on that to get more comfortable on currency and therefore the economy. Now, the timing is important because the real economy, in terms of adjusting to the higher levels of rupee, in terms of slowing trade deficit, that does take time. It can surprise markets positively, but still it will take time. while the currency market and stock markets are more real time and do react to a lot more short term sentiment as well as noise. That's a tricky part. So stabilizing this sentiment for the next couple of months, especially from the government side, that will hold key whether the market really cracks below 5250 levels or not.
Sandeep, how are you viewing the market in this fall? How much more downside would you give to the technicals?
Tanvir, I would talk of a 5200 target immediately as in coming week, and talk of the next 3 to 4 weeks. I would talk of a 4800, 4750, 4800, 4850, somewhere around that. And on the upside, I don't think 5400 would be crossed convincingly. So any move towards that would be an opportunity to sell or go short. And all this I'm talking of is the next 3 to 4 weeks. The fall should not take more than that, because normally the falls are much faster and sharper. So I can't talk of a 6 month and you will talk of a 4800. That will not happen. Probably in 3 weeks the game would be over.
Funny, do you now worry about the over-owned and the quality end of the Indian market?
That's right, and these were the 9 to 10 stocks which were primarily responsible for the index to be where it is, because the rest of the 40 stocks anyway have been beaten to death. So that the entire private banking space, largely the FMCG pack and to some extent the pharma pack, have been responsible for the index to be where it is. And in that space, I think the private sector banking is looking a little more vulnerable, followed by the FMCG. And pharma looks relatively stable at this point in time, because the asset quality concerns, although more acute in public sector banks, will also plague the private sector bank peers, especially the larger ones. And to that extent, since investors are already sitting on a large amount of profits, those who have invested 2-3 years back, I think it's natural for many of them to try and book profits.
Come to you, Sandeep. What are you seeing on some of these metal charts? Hindalco, Jindal Steel and Power, Tata Steel. You think the rally has run its course?
Well, Tanvir, I was very bullish till yesterday. Even at this point in time, in spite of this fall, Tata Steel has managed to hold on, though it is not done very well. But yes, there is some kind of a weakness in Hindalco or Jindal Steel. So with the market, some more downside, but I still think Tata Steel has strength at a level of 272. I would buy on to the declines into 265 or so and keep a stop below 260. And I still believe that it will have the strength to go to 300.
Funny, are you a big fan of this import substitution trade, because of late that trade has made money?
Not really, no. As you rightly paraphrased it, it's a trade. It's not an investment theme, because, in order to make it a good investment theme, you need to look at the overall medium to long-term sustainability and, more importantly, the demand drivers, none of which seem visible at this point in time. So it's at best a trading theme which has worked. And like all trading themes, there is no guarantee it will work from tomorrow.
Gautam, come to you. Do you think today's weakness is something to do with the food security bill? I mean, many are touting it to be really the spanner in the works for bringing down sentiment, which has already been quite fragile.
Sentiment-wise, yes, definitely. It's come at the wrong time. It's not a new news for the market. But when the market is looking for support from the government to stabilize sentiment, that does come at the wrong time.
Sandeep, IDFC lost 15% yesterday, lost about 7-8% on Monday, which means HDFC is down by about 25% in a matter of just 2 trading sessions. It's a Nifty 50 stock, and it's rare for a Nifty 50 stock to lose 25% of its market cap in less than 2 days.
Nikunj, did you talk of HDFC or
IDFC?
Yes, Nikunj. I think we had a sell in IDFC yesterday and were very surprised to get the target today. But at this level, I still see some more downside. I think it will go to somewhere around 72, 73, and a right level to sell it would be 85, 86. I think currently it is at somewhere around 79, 80. A bounce back of 3-4 rupees, I would still go short, and I see levels of probably even sub 70 is what I would talk of.
Funny, come in on, the broad IT and pharma theme, which showed relative strength in the market today at TCS, HCL Tech. Would you, Infosys in fact for that matter, would you accumulate at lower levels? I mean, would you be a buyer there?
if you are a compulsive institutional investor who wants to maintain some exposure in the market, you might look at, or you have no option but to buy those themes, because that continues to be the island of strength in the market. But as an individual retail investor, I think it might not be such a bright idea to go and buy them at these levels. However, if along with the broader market you get opportunities in these stocks at 5 to 10% lower levels, then I think from a medium-term perspective you can buy them. Because I'm still convinced that over the next 6 to 12 months, this is a space that is going to remain relatively resilient, and with currency at these levels, I think there is a huge tailwind which the market eventually will factor in.
Sandeep, come in on IT. Now IT has done well, but do you think it will be difficult for IT to hold on? Because when markets correct, everything corrects in a synchronized manner. Some stocks may correct before, some stocks may really lag the fall, but ultimately in a falling environment, everything comes down.
Well, whereas what you said is true, ultimately everything comes down, but then you have to distinguish between stocks that come down to go up eventually, or come down to and follow the downside and see more downside. I mean, realty space or the banking space have come down, and had you bought them on that logic, it wouldn't have made sense. But I think IT is a space where I am comfortable. Yes, it will come down with the markets if the Nifty sees 5,000, sub 5,000 levels. IT won't be spared either, but then it will bounce back faster. I think as an investor, not as a trader specifically, I am still comfortable holding the IT space or buying into it at lower levels, specifically a TCS, a Tech Mahindra, and a HCL Tech in this order, or probably HCL Tech, Tech Mahindra, and TCS in that order. I mean, HCL Tech is my, Tech Mahindra is my favorite stock at 1300, 1320. If it comes to, that is a 2.5-3% decline, I would buy into that, and I have levels of 1500 plus over the next 2 to 3 months.
Funny, that would be perhaps the argument that many would use for marquee names from the financial space as well, HDFC Bank. I mean, just look at the kind of correction there has been in their valuations from trading 4 times plus price to book. The range is now anywhere between 3 to 3.5 actually respectively for these banks. For many, this would be an opportunity to buy into these stocks.
Well, there are two ways of looking at it. One is what you have been suggesting, that it might be a good opportunity that many of the investors might think of getting into. But in general, if you look at an industry that had a very good time for 3-4 years, the business cycle has peaked, and now there is a broad-based correction, and not without reason. There is a good reason why that space is correcting. Then I guess the investing case for stocks like HDFC, which have always traded at a huge premium even to their private sector peers, like HDFC Bank at around 4.5-5 times price to book, is a little bit weak. So while the price to book might correct to 3.5 times, are we sure that it can't correct lower? We can't be sure. So I think it's a good idea for investors to let this storm pass and then, look at many of these good quality blue chips like HDFC, but not just get pegged to a particular valuation level, because once a sector corrects, then, it is often beyond the imagination of many investors as to what level the correction can take them to.
Gargi Parikh now joins us with some stocks to watch out for. Gargi.
Well, firstly, an Infosys, and if you look at the IT sector, we've seen it gaining momentum. In fact, it's probably one of the pockets other than metals where we've seen some buying coming in. Today, in fact, holding up smartly over a % increase that we saw on that counter. Remember, Bank of America has increased the target price on most of these IT stocks. In fact, they've maintained their buy recommendation, raising target price to 3,500 from the earlier 3,150 levels that they had. They've raised the target price for most of the frontline IT stocks, at least a couple of triggers that they've pointed out. Firstly, the demand uptrend that they are seeing in developed markets. That's probably one trigger for the IT companies. The rupee, in fact, reaching almost 65, 66 levels. That's going to pan out positively for these companies. They factored in, however, a 60 rupees for their earnings for future forecast. They've also said the US immigration reform delay is one of the key risks, but it's still not dead, and probably that's one risk that we will have to factor in for the IT companies, but that is going to continue. But the run-up probably is going to continue. The Sesa Goa, on the other hand, remember the merger with Sterlite, that is one trigger. Also remember if the government is going to sell out their residual stake in HZL as well as Balco, that's going to be a positive trigger. Also remember that overall for the iron ore industry, it is looking up. Prices have been going up. Steel prices also have been going up. Also the chatter about lifting of the ban on mining in Goa, that is going to be a positive. So all in all, for Sesa Goa, probably is going to be a continued buying that we will see from various investors.
Right, Gargi, thanks a lot for that. Sandeep Wagle, what is on your watch list for tomorrow morning? Where are you allocating disproportionate amount of money?
Nikunj, I have a sell in UCO Bank. I mean, it's a trade because the markets can certainly bounce back to 5400. So one has to be, I am not taking this as a position trade or an investment. This is a trade for the next few days. A sell in UCO Bank, stop loss 51, target 45. A sell in Reliance Infra, stop loss 338, target 315.
Right. Funny, come to you. What about your near-term recommendations?
Well, looking at the way the market is correcting, the valuations of some of the utilities such as NTPC, Power Grid or monopolies such as Coal India are reaching very interesting levels. So, if investors can get into stocks such as NTPC or Coal India on 5 to 7% further correction, if they get it, then I think it will be a very good medium to long-term buy for them.
Gautam, let's talk about the popular trade, which is IT and pharma. As a house, what do you like in that group?
So we prefer IT over pharma in the current environment, and the simple reason for that is in both obviously benefit from currency, but IT services beyond currency, beyond US recovery, also can use this big move into possibly building a more robust business model also longer term, both in terms of ability to gain market share and possibly making their positioning much more competitive. So that's a serious competitive advantage which they can possibly build on. Now that's something which they have to execute. It's not something which can happen overnight. But that's a big call to be made for IT services. So the earnings surprise for IT services may last beyond 1 year if they're able to execute on that. Secondly, if you look at the relative valuation multiple now, it's still not nowhere near the high seen earlier. And forget the tech boom of the late 90s. But even X that, the relative P multiple is still a long way to go. And that gives us a lot of comfort on that space, and to us it's not just a place to hide in the current market environment, but it's a pure alpha generating opportunity even from current levels.
Alright, Gautam, Fani, Sandeep Wagle, gentlemen, I really appreciate your time and thank you for joining us on this edition of Markets Tomorrow.